If you're a trader, you've heard the statistic, right? That an absolutely staggering 95 to 98% of people who try a prop firm challenge fail. But what if I told you the reason has almost nothing to do with how good of a trader you are? Okay, let's get into this because we're about to crack the code.
So yeah, this is the question that just haunts every trading forum, every Discord channel. You see the flashy ads from these firms, the ones promising you huge capital if you can just pass their test. You pay the fee, you start trading your strategy, and then, boom, you hit a drawdown limit and you're out. It is so frustrating, and it makes you question everything.
But this is where we have to start. Seriously, let this one sink in for a minute. Most people who fail these things aren't failing because they have a bad strategy or they can't read the market. No, it's something way more subtle, and it's actually built right into the design of the challenge itself.
That's right. The whole system is basically designed to exploit a mathematical loophole in all the standard trading advice we've ever been taught. It creates this environment where completely normal, healthy trading habits become the very reason you fail. But here's the good news. When the problem is math, the solution is also math. I mean, on the surface, these rules look totally reasonable. Make 8 or 10%, don't lose more than 5% in a day, or 10% overall. Seems fair, right? A good test of skill. But these rules don't exist in a vacuum. Together, they create this intense pressure cooker that forces you to trade in a very specific and honestly, a very dangerous way.
So let's pull back the curtain and really look at how this design statistically stacks the odds against you from the moment you start, turning even really good, profitable traders into just another failure statistic. Think about it. Every trading book, every guru on YouTube, they all say the same thing. Risk about 1 to 2% of your accounts on any single trade. And you know what? For a normal trading account, that's solid advice. But inside a prop firm challenge, with that 10% max drawdown just hanging over your head, what does that standard advice actually lead to? And here it is. This is the trap, right here in black and white. If you do what everyone tells you and risk 2%, it only takes 5 losses in a row, and any pro will tell you that's a totally normal part of trading, and poof, your challenge is over. Even at a pretty conservative 1% risk, a streak of 10 losses blows you up. You're basically being punished for something the market does all the time. And that is the absolute key takeaway here. The challenge isn't really testing if you can be profitable, it's testing if you can avoid a statistically inevitable losing streak inside a very, very tight window. You're not just unlucky. You're playing a game that's rigged to make normal trading look like failure. And this is why so many people think trading is all about psychology. When you're just a few trades away from failing, the pressure becomes immense. You start revenge trading to win back a loss. You start seeing setups that aren't really there. But here's the thing. Those psychological mistakes aren't the cause of your failure. They are a symptom of the intense mathematical pressure the challenge is designed to put on you. Okay, so we've laid out the problem. The math is just brutal. But now let's talk about the solution. And it's so simple, so small, you might not even believe it at first. But trust me, this is the key that unlocks the whole thing.
That's it. 0.5%. This isn't some secret indicator, it's not a new strategy, it's not some AI trading bot, it's just a number. But it's the number that completely changes the probability of you passing one of these challenges.
By dropping your risk from that standard 1 or 2% all the way down to just 0.5%, you fundamentally change the entire game you're playing. You basically go from sprinting across a minefield to running a marathon on a nice, clear road. Let me just show you what I mean. Just look at this side by side. Trader A, using the standard advice, is always just one bad week away from getting knocked out. But Trader B, with that tiny risk adjustment, can survive a losing streak that's more than twice as long. They've built this huge buffer against the market's randomness. They finally have the breathing room to let their actual trading edge play out. And this chart just makes it crystal clear. You can see how the probability of just surviving skyrockets as your risk per trade gets smaller. At 2% risk, you're basically flipping a coin. But down at 0.5%, you've literally engineered survival into your plan, making it the most likely outcome. This is the huge mindset shift. The goal of the challenge phase is not to get rich quick. It's just to survive. It's to prove that you can manage risk inside their little box of rules. The profit, that's just a byproduct of good survival, not the other way around. All right, so now you get the hack. Let's talk about the bigger picture. How do we take this simple math insight and turn it into a funded account that actually puts money in your pocket? And this is the obvious question, right?
If the secret to passing is just risking less, why is all of their marketing filled with traders making these huge, aggressive wins? Why isn't risk 0.5% the very first rule in their FAQ? Well, here's the simple, honest answer. Their business model depends on a high failure rate. They make their money collecting evaluation fees from everybody, but they only have to pay out to that tiny percentage of traders who actually pass. They market the dream of passing fast because that sells more challenges. They don't advertise the slow, patient, kind of boring path, because even though it works, it's just not as exciting.
So here it is. This is the new game plan, laid out in 4 simple rules. 1. Lock in that 0.5% risk, no exceptions. 2. Stop overtrading. Just wait for your absolute best setups. 3, and this one is so important, you have to embrace that this is going to be a slower path. The good news is, most firms don't have time limits anymore, so you have all the time you need. And finally, stop staring at the profit target. Seriously, just focus on executing your plan perfectly, and the target will just happen. This is the ultimate reframe. Passing the evaluation is just the ticket to the real show. The real prize is having that funded account that you can trade for months or even years. And the habits you built by being patient and disciplined during the challenge, those are the exact same habits that are going to keep you funded for the long haul. And that's really the final thought here. Stop trying to outsmart the market. Stop blaming your psychology. Just start playing the right game. Change the math, control your risk, and you will fundamentally change your odds of success. You're not just buying into a challenge, you're solving a math problem. And now you have the answer.